529, otherwise known as a qualified tuition plan, is designed as a saving for future educational cost. 529 plan can be used to pay for college, K-12 tuition, apprenticeship programs, and student loan repayments. Though the plan does not allow for federal tax deduction, some states do allow 529 to be state tax deductible. Investment strategies for 529 is flexible and can be invested in mutual funds, bonds, stocks, CDs, etc., all completely tax deferred. If withdrawal is used for educational purposes, it will also be tax-free for the individual. An individual is allowed to open 529 in any state, not just in the state that they live in. There are no limitations as to how much an individual can contribute into a 529 plan, and gifts can be made by different individuals into that account. However, gift tax should be considered when large contributions are being made. Remember, there's a $16,000 per year gift tax exclusion in 2022. Any contributions higher than this amount will count against the lifetime gift tax exemption. Some states also impose an aggregate amount of contributions ranging anywhere from $235,000 and up. For well-planned families, this is a great option for aunts, uncles, grandparents to make gifts on special occasions such as birthday, holidays, or just because. If the 529 is owned by an individual or their parents, 529 plans have minimal impact on the federal financial aid eligibility, making 529 an attractive saving option. It should also be noted that if someone else owns the 529, withdrawal to contribute to an individual education would have different consequences and can be counted up to 50% of the contributed amount. If withdrawal is for reasons other than qualified educational purposes, there will be a 10% penalty and tax will be imposed on all the gains. There are a few exceptions that will waive the penalty, such as the account beneficiary receives a tax-free scholarship, the account beneficiary attends a U.S. military academy, the account beneficiary dies or becomes disabled. Otherwise, to avoid penalty and taxation, when an individual do not use the money in a 529 for qualified educational purposes, they can change the beneficiary to another qualifying family member, such as a spouse, children, brother and sister, including in-laws, father or mother, including in-laws, aunts, uncles, or first cousin. The second option is to hold the funds in an account in case the beneficiary wants to attend grad school later. Third option is to make yourself the beneficiary and further your own education. Fourth option, roll over the fund to a 529 ABLE account, a saving account specifically for people living with disabilities. Another rule to note is though funds can be used for K-12 tuition or pay back student loans, the maximum amount is $10,000 for both the beneficiary and the beneficiary's siblings.